Welcome. Thank you for joining our presentation on federal recapture tax. This program will cover what recapture tax is and the responsibilities with it. So what is a federal recapture tax? Simply put, it is a tax imposed by the IRS for a preferred interest rate. The IRS imposes this potential tax when WHEDA's source of funds is coming from mortgage revenue bonds. This is true in the case of our FTHB, our first-time homebuyer preferred pricing, and the Tax Advantage Mortgage Credit Certificate Program. So when does recapture apply? Well, recapture applies when three items occur. First, if the borrower sells their home in less than 9 years. Second, they realize a capital gain on the sale of the home. And third, their adjusted gross income in the year they sell exceeds the income limits defined by the IRS. WHEDA provides these limits to the borrower post-closing. Sometimes it is easier to explain when recapture tax will not occur. The borrower will not be subject to recapture tax as long as they reside in their home for more than 9 years. If they decide to refinance their mortgage, it will not trigger the recapture tax. Only the sale of the home and a capital gain and a large increase in income. At the time of the loan application, a lender has the responsibility of having a borrower sign a form called Acknowledgement of Federal Recapture Tax Requirement. It is WHEDA Form 4 in the Forms and Exhibits list. To reassure the borrower the federal recapture tax will not negatively impact their situation, WHEDA provides a guarantee to reimburse them for any recapture tax they have to pay when using a WHEDA Advantage program. The borrower will receive information with their WHEDA Welcome Packet with the instructions on requesting reimbursement. The reimbursement is applicable when the borrower uses a WHEDA Advantage loan financing for their first mortgage. When the borrower uses the mortgage credit certificate with another non-WHEDA fixed-rate loan program, the reimbursement guarantee does not apply. When reimbursement is applicable, the borrower provides evidence the home was sold and they paid a recapture tax to the IRS. The borrower completes the recapture reimbursement form, Exhibit 7, along with the required documents for reimbursement. The borrower may ask you as their lender for a recapture reimbursement form, which is found in the Forms and Exhibits link on WHEDA.com in the Lender's Toolkit. WHEDA's responsibility is to provide specific information regarding the county income limits based on family size for the next 9 years. This is provided when we send the borrower a welcome letter after closing. We will also assist the borrower in the future if there is a recapture guarantee request. If the borrower does sell their home and recapture does apply, they would report this using IRS Form 8828 with the federal tax return for the year the home is sold. WHEDA anticipates only a small percentage of borrowers will be affected by the federal recapture tax. Many more borrowers will benefit from the lower interest rate provided through the FTHB preferred interest rate or the credit provided by the mortgage credit certificate. At the time of application, the borrower will be provided an acknowledgement of federal recapture tax, WHEDA Form 4, as a disclosure. The borrower will have a choice to choose a preferred interest rate or a mortgage credit certificate. This concludes the on-demand training for federal recapture tax. Thank you for taking the time to view this on-demand presentation. If you have questions, please contact us at 800-334-6873 or via email at underwriting@WHEDA.com.